Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be considering the blocks. We are considering the Bill Williams indicators in this series, and in today's session, we will be taking a look on the alligator. So here, you will have all these listing of the different indicators, and as we are just in the second session of this series, we are continuing our series with the alligator indicator. Yesterday we had considered the acceleration deceleration oscillator. Now today it is the turn of the alligator block. So you will have this description of the alligator. An alligator is a indicator which is made of balanced lines, the moving averages, and it also uses the fractal geometry and the nonlinear dynamics. This is a fairly useful indicator, and it is quite famous as well. Many of the traders, many of the technical analysts use it to gain the insight into the underlying trend and how is the price momentum holding out. So this is the chart for the alligator indicator, and you will have these three components of the alligator. One is jaw. This blue line is a jaw. The red line, the middle line is a teeth, and the green line is lips is called lips. So you have these three moving average lines which form the basic components of the alligator. Here there is a brief description for its build, and as you can see, the blue line is the balance line for the time frame that was used to build the chart, and it is defined for 13 period. Suppose if it is hourly, then it will be of 13 hours. Suppose it is of 10 minutes each, then it will be the average for last 130 minutes. So whichever the time frame you use, the candle time period, it will be dependent on that, and it will take into account the last 13 candles of the defined period. So here, and one more important thing is that this value which we get is moved into the future by 8 bars. So here I would explain to you the logic. Now if you consider this time, here the candle's time is 8 10 past 8 GMT, and here if we now have to consider the alligator's value, it will be moved 80 minutes into the future, 8 bars of 10 minutes each, and this will be showing the value at 9:30 GMT. So you have this data, these values generated on a futuristic basis. So here you will have this value as it is 107.15. It is being moved into the future, and it is kind of helpful when you want the forward looking indicator to guide your trading decisions. So in such scenarios, you can rely on the alligator to do the job for you. Moving on to the red line, the alligator stick, and it is the line for the value of the time frame of one lower level, and this time it is calculated for the 8 period smooth moving average moved by 5 bars into the future. So here this is defined for 8 candle periods, and it is moved into the future by 50 minutes when we are calculating the alligator values of on the 10 minutes candle period. So here this value is being derived for 9 GMT, whereas the current candle period's time is of 8:10 GMT. Now the green line, it is defined for the 5 smooth moving averages and moved into the future by 3 bars. So this is the component calculated using the list candle periods candles data, and as you can see, it is moved into the future by 3 candles. So here we have this combination of the smooth moving averages, and these are defined. The joy is defined for 13 candle periods. The alligator teeth is defined for 8 time periods, and the alligator's lips are defined for 5 candle periods. You can do the modification as well. Suppose if you want to use a different combination, you can do that. You can also change the applied price. I would also explain to you this applied price on the Visual JForex platform, where you can bring in this indicator and tooltips. Here, these are all the parameters, input as well as output parameters, which you will be able to use while defining the alligator indicator on the Visual JForex platform. So here is the alligator block, and whenever you will be using the alligator into any algorithmic setup, you will have to connect it either to the on candle, on tick, or trade event, depending on your requirement. And then now we are not going to go into the details of building a fresh algorithm. For the time being, in this series, we are just concerned with the basic introductions of all these indicators. So we limit our activity to that, and here you will have the brief description for the alligator, and this description we have already considered. And if suppose any confusion or any clarity, if there is some confusion and if you want to gain any clarity, you can just click on this info part and see what is there in the alligator's hood. So here you have to define these input values: default instrument, time period, shift, jaw time period, and tip time period, and dips time period. So here you have to define all these input parameters, and then depending on the input parameters you will have the output values. And as here you can see, these are named jaws, teeth, jaw, teeth, and lips, and this naming is the naming can be altered. You can change the name of these output parameters to make it more convenient if the need be. And here you have further settings down the line, and you can choose the calculation to be based on the bid side or on the offer side. It can be carried out both ways, so you can choose, and it does make difference. The way you calculate the pricing of an indicator is going to be reflected in its output values. Suppose here you want to make changes, if you want to edit, and you want, so here we have to do the calculation use from chart. So here you can say choose ask side. In that scenario it will be calculated differently, and now the calculation is on the ask side, and as you can see, the current value stands at 107.245 for the alligator jaw. And suppose if we choose a different setup, just remember this value, it is 107.245, and if we now make the calculation dependent on the bid side, you will have a slightly different output value. So here at the same instance we have, as you can see, a different value which is slightly different. There is not much pronounced difference between both these values, but it is bit side, it is less by 0.003 pips. Now here these input parameters have to be customized to meet our requirement, and as I have already explained to you, you can choose any default instrument. So if you want to work with the Euro USD, you can take Euro USD, you can take other currencies. So that is all up to you, and whichever algorithm you want to run on any particular instrument, you can define that, provided it is supported on the Visual JForex platform, and you have the support for most of the Visual JForex listed instruments. So here, if you are using any instrument which is here in this list, then most probably it is supported for your algorithm, and it will work fine. Now moving on to the default time period, as I said, depending on the time period, you will have different set of values. If we make it half an hourly, then here this structure is different for the half an hourly time frame for USD JPY, and if it is going to be calculated hourly, then again the structure is going to be different. So all these calculation needs to be customized, needs to be predefined to suit our purpose, and then we will be able to build a fairly profitable algorithm. Now shift if shift is taken as 0, then that means the algorithm will be looking at the current value of that particular indicator. If we use shift say 1 or 2 or 3, then it will go back in time by that many candles. If we use the shift 5, then the value of the alligator will shift 5 candles back, and then that value will be fetched and it will be utilized for the purpose of calculation, or whichever way we have defined. So that is how this shift is going to work, and this is the default setup. Jaw time is defined for 13, teeth is 8, and lips are 5. But suppose if you want to use a different setup, then you can make changes here, and you can do the editing, and in editing you can change these values. Suppose if you want to choose a different time frame of say 21, then you can simply have different value put in here, and it will be calculated differently. So you can change the time period as well. Let us simply try this, and you will have, so here earlier the structure for this alligator was different, and now as we have changed the input parameters, the calculations are now fairly different. So whichever way you want to use, you can do some experimentation and see which way it suits better. And the goal is always to be able to define the underlying momentum, the underlying trend. So to that goal, anything which suits your purpose, anything which suits your taste, or anything which can get the job done is a good enough combination, and that's what we want to do. So here there is a different combination of the time frame. Now again, let us restore it to what it was in a default setting, 13, 8, and 5. So this is how we are going to use it. Maybe you can make changes, but as I said, we will stick with the default values while working with the setup here. And applied price also makes a lot of difference. High price, low price, open price, close price. Let me show you on the chart. Suppose if you want to use low price, then the calculation will be dependent on the low price of all these candles. So let us first note the current value of jaw, and the current value of jaw is 107.24, 107.243. Now if we edit it to display the alligator output value when calculated on the low price, so here is the calculation done on the low price, and as you can see, now the alligator jaw value is at 107.202. So it has shifted on the downside by almost 4 pips. So this is how it is going to be the case whenever you change the calculation, the applied price for it. If we now take the high price, you will have this alligator value shifted higher. And again, if we consider now the values here, you will have this difference of almost 7 pips between the high price and the low price calculations. So as you can see, now the alligator jaw stands at 107.277. So this is a kind of a wide difference between the prior value and the current value, and this makes all the difference when you are determining the setup and which way you want to customize the underlying instruments indicator. So that's why we have to pay attention to all these settings, and then carry out the requirements as per our estimates of profitability, and how the changes are going to impact the profitability of the algorithm. That needs to be kept in mind, and then everything needs to be suitably modified so that it works fairly well for our desired purpose, the desired goal of achieving a profitable setup. So that's it from my side for today's setup, in which we have tried to get well familiar with this alligator, which was developed by the Bill Williams. And now in today's session, I would leave it here for you to experiment with it and see this Visual JForex platform can be utilized in a robust manner to help you build a algorithm while using the alligator indicator. And I hope you will do the experimentation, and you will try out different combinations and then see which one is more profitable and which one is not. I thank you all for joining in. See you tomorrow. Goodbye.